Hello everyone, welcome to ACCA Pakistan Free Guide by Rida. In this video, we'll explore the basic concepts of accounts and why they are crucial for your ACCA journey. I want to mention here that whether you are in 11th, 12th grade or have already completed a bachelor's degree like me, this guide will help you build a solid foundation. So let's get started. So let's start with the basics. Accounting is a process of recording, classifying, summarizing, and interpreting financial transactions to provide useful information for decision making. Think of accounting as a language that speaks the financial health of a business. It allows us to understand the performance, make better decisions, and ensure long term success. Accounting helps in keeping track of where your money comes from, where it goes, and whether you're making a profit or a loss. Now, why do we need accounting? So, here I have some key reasons. Track income and expenses. Without proper accounting, you would not know how much money you're earning and spending. Evaluate profitability. It helps you determine whether the business is making or losing money. Then, compliance for taxes. Government and regulatory bodies require businesses to keep records for taxes and audits. Make better decisions. You can use financial data to budget, plan, and invest wisely. In short, accounting is essential for managing any business or personal finances effectively. As I already mentioned before, accounting is a language of business. But did you know there are two main types of accounting that serve different purposes? One is financial accounting and other one is management accounting. Let's explore the differences between financial accounting and management accounting. So financial accounting focuses on providing information to external parties such as investors, creditors, and regulators. It involves preparing financial statements like income statement, balance sheet, and cash flow statement, etc. These reports are created following standardized rules like GAAP or IFRS to ensure consistency and comparability. So, GAAP stands for Generally Accepted Accounting Principles, whether IFRS stands for International Financial Reporting Standard. These are the standardized rules and guidelines used in financial accounting to ensure consistency and transparency in financial reporting across different organizations and regions. And GAAP is commonly used in the United States while IFRS is used internationally. Now, management accounting. On the other hand, it is for internal use. It helps managers to make informed decisions through detailed reports like budgets, cost analysis, and performs evaluations. Unlike financial accounting, it's more flexible and doesn't follow strict rules, allowing businesses to customize the information according to their needs. So, in summary, while financial accounting provides a big picture for external users, management accounting offers detailed insights to help managers drive business success. Now, by looking at the five heads of accounts, these five heads of accounts are the backbone of accounting, and these are the categories we use to classify all financial transactions. This is essential knowledge as you begin your ACCF3 journey. Now, let's break down each head of account and understand the titles within them. I'll be using simple examples to help you understand their purposes in accounting. So, first is assets. Assets are resources owned by a business that provide future economic benefits. For example, cash. Cash is the money a business holds which can be used for daily operations. An account receivable represents money owed to the business by its customer for goods and services sold. An example could be if you sell goods on credit. The amount your customer owes is an account receivable. Inventory includes the stock of goods that the business intends to sell, while equipment and building are physically while equipment and buildings are physical assets like machinery or offices that the business uses. Lastly, prepaid expenses. Prepaid expenses are payments made in advance for future services, such as paying rent for the next 6 months. Then we have expenses. So, expenses are the costs incurred to run the business. Salaries expense is the money paid to employees, and rent expense is what a business pays for office or store space. Utilities expense includes costs like electricity and water. Depreciation expense refers to the reduction in value of long-term assets like machinery over time. And then supplies expense. It covers the cost of items used during operations such as office supplies. And interest expense. It is the cost of borrowing money like the interest on a business loan, right? Then we have revenue. Revenue is the income a business earns from its activities, like sales revenue. Sales revenue comes from selling products, while service revenue is earned from providing services. For example, a bakery earns sales revenue from selling cakes and service revenue from catering events. Interest income is money earned from investments, such as interest on a savings account. Okay, and rental income is what a business earns from renting out property or equipment, like that. Then we have liabilities. Liabilities are obligations the business has to pay others. Account payable. Account payable is money the business owes to suppliers for goods or service received. So imagine you purchase office supplies on credit. This would be considered account payable. Okay, loan payable refers to any borrowed money that needs to be paid back, like businesses loan from a bank. It is a simplest example for that. Then accrued expenses. They are the cost that have been incurred but not yet paid, like wages owed to the employees. Notes payable are written promises to repay a specific amount of money, and unearned revenue is money received before delivering a service, like subscription payment made upfront. Last but not the least, equity. Equity represents the owner's interest in the company. Owner's capital is the amount the owner has invested in the business. For example, if the owner contributes $10,000 to start the business, that becomes part of owner's capital. Retained earnings are profits kept in the company after paying out dividends to shareholders. Common stocks refer to shares issued to investors, while drawings or dividends represent the money taken out of the business by the owner or paid to the shareholders. So, in short of all this, is that understanding these heads of accounts and their titles is crucial for your for proper bookkeeping and financial management. So, each account plays a unique role, as I told you before, in the financial health of a business. Whether it's assets that provide value, liabilities that require repayment, or expenses that impact profitability. So in accounting, we follow the double entry system where every transaction affects two accounts. One is debited and the other is credited. So let me explain the rules of debit and credit for each of the five heads, right? So for assets and expenses, a debit increases the balance and a credit decreases it. For revenue, liability, and equity, a credit increases the balance and a debit decreases it. So whenever you record a transaction, always ask yourself that what account is increasing or decreasing, and is it an asset, liability, expense, revenue, or equity, right? Let's look at a few examples to apply these rules. So, when you buy a laptop for the business, you increase the asset, that is laptop. So, you debit equipment and credit the cash. Then, when you take a loan, you receive cash. So, you debit the cash and credit loan payable. That is a liability for you. Then for a sales income, you increase the cash asset by debiting cash and increase income by crediting sales revenue. Simple as that. Last, when you pay rent, you increase the expense by debiting rent expense and decrease cash by crediting cash because you are paying cash for the rent, right? These examples show how every transaction involves a debit and a credit. This keeps the accounting equation balanced. So I hope my approach to explaining these concepts was helpful and made the start of your ACCA journey a little easier to grasp. My aim is to simplify these topics so you can establish a solid foundation for your studies. If you found this video useful, make sure to like, share and subscribe. Don't forget to hit the bell icon to stay updated. Thank you for watching. I'll see you in the next video.